Welcome to the Opening Bell Report.
But today, we're looking at a set of notes that argues the entire world changed in, about 6 hours of trading?
It really is one of those blink and you missed it moments in market history.
We're talking about AST Space Mobile, ticker ASTS. And if you're just glancing at the headlines or, your trading app, the numbers are frankly eye-watering.
Oh, yeah.
The stock closed at $115.77. That's a new all-time high. It's up over 14% in a single day.
And it didn't even stop there.
Nope. It kept pushing to $116.50 in after-hours trading?
That's aggressive, even for a growth stock.
More aggressive. It's explosive. But here's the thing that really caught my attention in the analysis report we're covering today. Usually, when a stock goes vertical like this, the smart money starts screaming, bubble.
Right. Overbought. Take profits.
Exactly. The party's over. But this report, dated January 17, 2026, is saying the exact opposite. They're calling the $100 level a launch pad.
Right, and that is a crucial distinction. Most people see a resistance level breaking and think ceiling.
Yeah.
This report sees a floor. The central argument here is that AST Space Mobile isn't just a stock that had a good day. They're arguing that the fundamental nature of the company, its very DNA, changed overnight.
And they aren't subtle about it. I mean, the word parabolic shows up in big, bold letters. They claim this rally is, quote, just getting started. Now, I have to play the skeptic here immediately. When I see a stock at $115 that was trading much lower not long ago, my instinct is, I missed the boat.
Of course.
I feel like I'm chasing. Why should we believe this isn't just hype? What's the actual mission of this deep dive?
The mission is to dismantle that fear of heights. We need to parse through the hype to see the mechanics. Because according to this analysis, AST Space Mobile isn't just a speculative telecom play anymore. The thesis is that it has transformed into a defense infrastructure essential. And that pivot is what caught Wall Street completely off guard this past Friday.
Okay, so let's dig into this pivot, because for the last few years, whenever I read about ASTS, it's about cell phones, it's about 5G from space, connecting the unconnected, partnerships with AT&T and Verizon. It's a consumer story.
Right.
But this report identifies a catalyst that has absolutely nothing to do with my data plan. They call it Operation Shield.
This is the headline that changed the valuation model. The analysis highlights that AST Space Mobile has been selected as a prime contractor for the U.S. Missile Defense Agency's SHIELD program.
Whoa.
And we need to pause and really look at the scale of this. The broader program has a dollar figure attached to it, $151 billion.
$151 billion. That's a GDP of a small country kind of number. But I want to push back on this. Companies get government contracts all the time.
Yeah.
Usually they get a tiny slice of the pie. They make the lug nuts for the fighter jet, or they, cater the lunch meetings. Is ASTS just picking up scraps here?
That's the question everyone should ask, and the report addresses it directly. The key term here is prime contractor.
Prime.
In the world of government defense contracting, the prime is the architect. They aren't the subcontractor making the lug nuts. They're the ones designing the vehicle. Being named a prime on a program of this magnitude means you are a core pillar of the national security architecture.
So they aren't just a vendor anymore. They're
a partner.
A partner, exactly. And think about what the SHIELD program is. It's missile defense.
Right. It requires constant, unbreakable connectivity anywhere on the planet. You cannot have dead zones when you're tracking hypersonic threats.
Makes sense.
The report argues that AS is the only entity capable of providing that layer. So before this news, investors viewed ASTS as a commercial speculative stock.
Right. It was a gamble. Will the tech work? Will enough people pay like $5 a month to make it profitable?
Precisely. It was a consumer bet. But now, the report argues they are a defense giant. They're critical infrastructure.
Okay.
When you become part of a $151 billion missile defense program, you aren't just a company selling a service anymore. You are a national security asset. The government needs you to exist.
That feels like a massive safety net. But let's talk about the money. Because safety nets are nice, but investors want returns. The report mentions this concept of de-risking. How does a defense contract de-risk a satellite company that has historically burned through cash like a bonfire?
It comes down to the nature of the cash flow. In the commercial world, revenue is volatile. You have to acquire customers, you have to deal with churn, you have to market the product. It's lumpy.
Yeah.
But with a government contract of this magnitude, you have guaranteed government-backed cash flow.
It's the difference between working on commission and getting a massive salary.
That's a great analogy. And the analysis points out that this capital effectively funds the rollout of their Bluebird satellites. Previously, the biggest fear, the bear case, was that ASTS would run out of money building the satellites before they got enough customers to pay for them.
The famous valley of death for startups.
Exactly. But Operation SHIELD builds a bridge right over that valley. The government is essentially paying for the infrastructure because they need the satellites for defense data. But here's the magic part. Those same satellites can still be used for commercial 5G.
So the taxpayer funds the build-out for national security, and ASTS gets to sell the excess capacity to AT&T and Verizon for pure profit.
That is the dual-use economics. It completely changes the margins. The cost of building the network is being subsidized by the most reliable customer on Earth, the U.S. Department of Defense.
Wow.
That is why the report says the financial outlook has been de-risked. The bankruptcy risk is effectively zeroed out.
That makes sense. You remove the if regarding survival. Now, I want to pivot to the market reaction itself, because the report spends a lot of time on the mechanics of this price move. They use this word parabolic. We've seen the stock jump 14% in a day. Is this just excitement, or is there something mechanical happening in the plumbing of the stock market?
It's a mix of both, but the mechanics are what makes it explosive. The report highlights a short squeeze potential, but it's specific to how ASTS has been traded historically.
Okay, let's break that down. We hear short squeeze and everyone thinks game stock or, meme stocks. What's happening here specifically with ASTS?
So historically, ASTS had a very high short interest. That means a lot of investors, hedge funds, skeptics were betting against the stock. They were borrowing shares to sell them, hoping to buy them back cheaper later.
They were betting the company would go bust, betting on that valley of death we just talked about.
Right. But then the stock breaks $100. It hits $115. Those people betting against the stock. They aren't just wrong. They're underwater by massive amounts. The report explains that breaking that psychological $100 resistance level forces those shorts to cover their positions. To stop the bleeding, they have to buy the stock.
They aren't buying because they like the company. They're buying to survive.
Exactly. It's forced buying. And the report adds another layer to this, the gamma squeeze.
Okay, gamma sounds like we're back in physics class. Let's translate that for the listener. What does a gamma squeeze actually do to the price?
It acts like fuel on the fire. It involves the options market. When investors buy call options, betting the stock goes up, the banks or market makers who sell those options have to hedge their risk.
Right.
They don't want to lose money if the stock flies. So how do they hedge? They buy the actual shares of the stock.
So the more people bet the stock goes up, the more the banks are forced to buy the stock, which
Yep.
makes the stock go up.
Exactly. Creates a feedback loop. As the price rips higher, the market makers have to buy more shares to stay hedged. So you have the fundamental buyers who love the shield news. You have the short sellers forced to buy to exit their bad bets. And you have the market makers forced to buy to hedge.
It's a triple threat of buying pressure.
It is.
And there's one more factor the source mentions, which I think is really evocative. Blue sky territory. I love that phrase. It sounds peaceful, but in the markets, it usually means something pretty wild.
It does. It refers to the fact that ASTS is at an all-time high, trading at $115, $116. This means there are no historical sellers. Think about it. If you bought a stock at $150 3 years ago and it dropped to $50, you're miserable. You're waiting for it to get back to $150 so you can sell and just break even. You're a backholder.
You're just praying to get your money back, your wall of resistance.
Exactly. But with ASTS at $116, nobody has ever bought the stock higher than this. Everyone who owns the stock right now is in profit. There is no wall of people waiting to sell at a break-even point. That lack of overhead resistance allows for what the report calls rapid price discovery.
So the price can move up very quickly because there's nobody standing in the way saying, I want out.
Precisely. That is why they use the term blue sky. The ceiling is gone.
That brings us to the institutional panic the report mentions. It says Wall Street was caught off guard.
I find that so interesting. These are the professionals, the big banks. How do they get caught off guard by a $151 billion program?
It happens more often than you'd think when a company shifts sectors. The telecom analysts were watching ASTS, but the defense analysts weren't paying attention.
Yeah, that's interesting.
The report notes that volume spikes suggest institutional money is now chasing the stock. They realized over the weekend, wait a minute, we are underweight on this.
Underweight meaning they don't own enough of it for their clients? Right. If ASTS is now a critical defense asset, a large portfolio needs exposure to it. If you're a fund manager and you have zero exposure to the newest time contractor, you are failing your benchmark. So they have to buy, and they have to buy now, regardless of the price.
It's FOMO, fear of missing out, but at a billion-dollar scale.
That is exactly what it is.
So we've established the catalyst and the market mechanics, but I still have to play the valuation card because a lot of people look at a stock that's doubled or tripled and say, well, the easy money has been made, it's too expensive now. The source makes a really interesting comparison here to two other companies to justify the price, Palantir and SpaceX. Why those two?
This is key to understanding the valuation reset the report argues for. Both Palantir and SpaceX managed to bridge the gap between being a commercial technology company and a government defense essential.
Okay.
Palantir did it with data analytics. SpaceX did it with launch capabilities.
And the market values them differently because of that.
hugely differently. A standard telecom company, think of a utility, might trade at 10 or 15 times its earnings. It's boring.
Right.
But a high-growth defense tech company, that can trade at 50, 60, even 100 times earnings because of the strategic value and the growth potential. The report argues ASTS is migrating from the telecom bucket to the SpaceX Palantir bucket.
So if you try to value them like you value Verizon, you're using the wrong ruler.
Exactly. You're doing the math wrong. The report says the defense contract requires a complete re-rating of the stock. And this leads to what they call the analyst flip. I found this part almost funny in the report. It notes that most analysts currently have hold ratings with targets of $45 to $60.
Which is practically half of where the stock is trading right now.
Right. So if I'm an analyst at a big bank and my target is $50 and the stock is at $160, I look pretty silly come Monday morning, don't I?
You look irrelevant. And that's why the report predicts a flood of upgrades. Analysts are forced to raise their price targets just to chase the reality of the market. They have to justify why the stock is up, so they'll upgrade their ratings to buy and slap a $150 or $180 target on it, just to stay in the game.
And ironically, those upgrades will likely drive the next leg of the rally because it validates the new price for other institutional investors.
It's a self-fulfilling prophecy. The price goes up, so analysts raise targets, which makes the price go up. But there is hard data backing this too, right? It's not just sentiment. The report mentions revenue projections.
Yeah, I saw this number and I actually thought it was a typo.
Me too. The report says that 2026 and 2027 revenue estimates are being revised upwards by over 1,000%.
1,000%.
How is that even possible?
It's the mechanics of government contracting versus commercial sales. In the commercial world, you get paid after you deliver the service. You wait for the subscriber to pay their bill. In the defense world, especially on a contract like SHIELD, you often get massive upfront payments. They're called milestone payments.
So that money hits the books immediately.
Yes. The government pays you to build the capability. This isn't money they might see in 10 years. It changes the balance sheet immediately.
And that leads to the boldest claim in the entire document. The source says, quote, "The bear case is dead." That is a very definitive statement. In finance, there's always a bear case.
It is bold, but if you follow the logic of the report, it holds up. The bear case, the argument against the company, was always about toxic dilution.
Let's unpack that term, toxic dilution, for the listener. What does that actually mean for their wallet?
It means the company runs out of cash and has to sell more shares to the public just to keep the lights on. When you print more shares, the value of everyone else's shares goes down. It's like cutting a pizza into more slices. Your slice gets smaller. It destroys shareholder value.
And the SHIELD contract kills that fear.
Completely. The report argues that the upfront payments from the contract remove the need for toxic dilution to fund operations. If the government is fronting the capital, ASTS doesn't need to sell stock to the public to survive. If the bankruptcy risk is zero and they don't need to dilute, the bear case really doesn't have a leg to stand on anymore.
That is a massive shift in psychology for an investor. Okay, so let's get practical. I'm listening to this, I'm hearing defense giant, parabolic, revenue up 1,000%. But I'm also seeing the stock at $115, up from where it was just a week ago. The host in me is asking, is it too late? How does the listener handle this golden opportunity without getting burned buying the exact top?
The report is very specific about this, and I think it offers some very grounded advice amidst all the excitement. It explicitly says, do not chase blindly at the open.
So don't just mash the buy button as soon as the bell rings on Monday morning.
Right. They expect volatility. Remember, there are people who bought this stock at $5 or $10. They're sitting on massive gains. Some of them will sell. There will be profit taking. The advice in the report is to view any pullback to the breakout level, that $100 to $105 range, as a gift.
So if it dips back to $100, that's not a sign of weakness. That's the entry point.
Exactly. That's the launch pad they refer to. They view that as the new floor. If you can get in there, the report frames it as a golden opportunity.
And this isn't a quick flip, is it? They aren't saying buy Monday, sell Tuesday.
No. The perspective here is long-term. There's a line in the report that really stood out to me. We are holding for the 2027 dividends.
Dividends? Wait, high-growth tech companies don't usually pay dividends. They reinvest everything.
Mature defense companies do. And that's the signal. The report is looking past the immediate volatility to when this company is a mature cash-printing machine, like a Lockheed Martin, paying out profits to shareholders. They're playing the long game.
That requires some patience. But the report argues the room for growth is still there. I mean, the market cap is around $35.8 billion right now. That sounds huge.
It sounds huge to us, but context is everything. The report compares this to traditional defense giants like Lockheed Martin or the massive telecom players. $35 billion is actually still considered small in that playground. If ASTS is truly joining the ranks of critical defense infrastructure, the argument is that a $35 billion valuation is just the beginning of the curve.
So even at $115 a share, the argument is that you're buying a small fish that just got a contract to become a whale.
That's the analogy. You're buying the transformation.
It really is incredible to think about. We started this deep dive talking about a stock chart, but we're really talking about a company growing up in public. It went from a maybe to a must-have for the U.S. government in the span of a weekend news cycle.
And that's rare. You don't see pivots this clean very often. The convergence of a technical breakout clearing that $100 level with a fundamental catalyst like the $151 billion Shield contract, it's the perfect storm for a re-rating.
So, to recap for everyone listening, the source argues that the $100 resistance level has turned into a launch pad. This is fueled by a massive defense contract that changes the company's identity from a speculative telecom play to a government-backed defense asset. The bear case of bankruptcy is dead, the analysts are scrambling to catch up, and while we shouldn't chase the immediate spike, any dip back to that $100 level is a major buying opportunity.
That sums it up perfectly. It's a story of validation.
I think the most striking thing for me was just how asleep the market was. It brings us to that final thought from the report, which I think is just a perfect way to wrap this up.
Yes, the quote that really stuck with me. Wall Street fell asleep on the commercial potential, but they woke up to a defense giant.
And that is a wake-up call worth paying attention to. Thanks for diving into the numbers with us today. Keep an eye on that market open this Monday. It's going to be one for the history book.
Don't forget to like, share, and subscribe for more.